I'll record this. It's Sunday, August 30th, 2020. It's about 7:28 p.m. Central. We start things off at 7:30 p.m. Central, and people will start rolling in shortly. But um, I'm looking at. I have 3 spots open for the mastermind group, and we want to keep it small. But tonight we're going to talk about the upcoming markets, upcoming trades. We know Apple, Tesla, or Apple's already split. My son was looking at his and was showing how they haven't updated the price. I mean, the prices are going to adjust, but I think one of our members, friend of mine, Keisha, she put a joke in one of the Telegram groups that uh, really, man, I'm thinking Robinhood might that server might freeze up tomorrow or lock up. So be careful, be prepared to do whatever you're going to do, or don't panic. And remember, Robinhood does not have the best customer service. It's not quick. It's not. They don't. I don't think they have phone lines, so you're going to do emails. But um, go ahead and just be prepared for the market. Let's see what Apple's chart looks like. This is the 5 minute. I'm going to put the daily charts up. And let's see here, Apple. And oh yeah, there's Apple. Okay, man, Apple is not quick. It's not a. Look at that. Look at that. Apple's gonna take a pause at some point. Okay, look at that. That was a previous price level. I think price adjusted maybe. What is this? Or that was an old trend line. And Apple's done this before. But brother Maurice had mentioned, he was like, guys, he was thinking, he was waiting and expecting Apple to pull back, but there is a gap. Let's go ahead and draw this up, and when everybody comes in, I'll reconvene with that gap. But edit that 8 minute, and I can keep the 21 day up there. But all right, gapped up right there. Close of 96.19. Opened at 102. So I can visualize that gap to the 102 area down to 96. It's not out of the realm of possibility. Apple does a good job of pulling back. Oh, all right, Kylan, you're in here, brother. Hey, what's going on, Kylan? Let me fix the. Hopefully, I can. Okay, yeah, you can unmute. Yeah. Hey, what's going on,
Going on
man?
now?
Hey, what's happening? Can you hear me?
Yeah, I can hear you.
Okay. Okay. I'm just looking at Apple. We're in kind of early, you know. I'm actually broadcasting the first part of this on Facebook just for a couple of minutes.
Cool.
And then, but I'm looking at Apple, just looking at that gap up, trying to see about, I do expect a pullback, but I don't know when, you
You
know.
know, it'd be a great pullback to like $95. That'd be a great pullback.
That's the gap right there. It was at 96,
Oh,
96.14.
ooh.
And then there's a tiny gap before that. What's the high? The close was 90, 92.62. So there are two little baby gaps that, what's the low right there? Not, yeah. So 92.62 and then 96.14. I'm going to draw up that gap right here real
Yeah, I'm
quick.
debating how like to play that long term. Should I just load the boat or just slowly accumulate?
I like the slow accumulations because, man, Apple does a always does a correction, man. Let's go back. Let's go
Hmm.
back.
Especially around this time of the year, especially.
What year was this? This was 2018. Had a big time correction and Got Keisha coming in. Hey, what's going on, Keisha? Oh, let me send my wife that real quick. What's happening, Keisha?
Not much. How's it going?
All right, all right. Just letting everybody kind of roll in.
Cool beans.
There we go. But yeah, I was looking at the gap on Apple, but this was like 1989 and okay, anyway. 2018. Uh let's see, the high was 57.22, and then it closed, the low was 36.65. So there's been, those, there's always been that pullback. And right here, 29, well, January 2020 was the high was 81.96. The low was 53.15. So Apple has historically done those corrective phases. Let's see, what's that? 80, 16, say 20. You know, I just feel that there's a possibility, definitely a possibility of the pullbacks happening on Apple, and I'm looking at that daily chart right now for that gap right here. I don't know when it's gonna happen. There's actually the first, it's a gap party, and the gap band is coming for that, and then even down to 92. So I'm just trying to see how this is gonna work out. And let's put the gap. What's the open is 102.88. I'll do it at 102.89. And we go 96.10. And let me change that color. For some reason, anytime I'm sharing, I cannot adjust my screen. Okay, let me just, I want to get this right. I want to get my colors right. See if baby blue works. All right. We'll leave it like that. And if I can share. Bam, there we go. Okay. Well, yeah, I think it's going to pull back. And I know you, Keisha, you were looking at your TD, I think, account where it was showing the issues with the
It's not really an issue. It's just the split. You can
it
see
hadn't
you
adjusted
can see the
yet.
mechanics behind it, the adjustments.
Yeah,
I
yeah,
was like, I'll receive that. I'm gonna receive that blessing. That's how
yeah. That
my
was
my.
yeah, that was nice. That looked good right there.
They went from giving me. I knew I was supposed to get 12. Then it went to 24. Then it went to 36. I was like, okay, don't let it be there in the morning.
Yeah, right, right. Well, shoot. Uh, we're gonna wait a couple more minutes, but I'm gonna go ahead and get. Matter of fact, I'll go ahead and get started. I wanted to talk about a couple of situations. I'm still looking at, of course, watching Apple, and I'm not going long Apple right now for a trade. I'm just gonna let it, it's gonna hold it right now. But and if y'all are looking at anything, I'm currently looking. I'm in crowd. Let's see what the daily looks like in crowd right now. It's kind of at a little pause. I don't like that. Now, honestly, I wouldn't enter on this. I was in it. I mean, the daily looked good at one point, which had a good position. So I'll look at taking a profit on that, and I'm short Neo right now. I'm in puts. I know you were in puts, weren't you, Keisha? I think you were. And shout out to Wifey. Wifey's in there. Yeah, I like the layout with I like Neo's layout with being short right now. I'm gonna stop the broadcast right now on Facebook. But yeah, Neo's really setting up for me for that continued short. So I will continue with that. Let's see what the 4 hour looked like. Found a little support, a little strength, but it was bear flag, beautiful bear flag. And if it breaks below that $18 handle, it could pour out of bed and retest 1511. So we'll see. But, we'll just see where that goes. Let me set that up. And are you guys looking at anything for this upcoming week? Put it in the chat bar or, unmute the mics. I'm going to pull up Uber for Wifey because it was setting up, to me, it looked like it was setting up for a bullish move. It's overbought on the 4 hour, but I think the daily looks good to me. Yeah, daily looks real good. Now we're coming up towards a little double top, triple top area. So above that 34.19 handle, you see another run, but it's trying to close a gap that it was testing. That close was 34.83. So I'm looking for a push up right there, but that is a bull flag of bull flags, a perfect bull flag. Volume was slightly declining, so we might have to retest it. So we'll just see what we're gonna, how that's gonna work. WMT, Walmart, okay. Let's take a peek at Walmart.
I'm long on Walmart, but Friday, well, it started moving a little bit before Friday, but
All right, how long you been in?
oh man, I've been in Walmart maybe since mid-July. I have a January uh call.
Okay, let me look at the.
They were supposed to do the subscription like Amazon, and so then they got pulled back, so I'm waiting. So
Well, I'm looking at the weekly. The weekly looks real good, looks strong. Um, it's worth the time, worth it to. It just looks good. That trend. It broke above that resistance, that breakout level. So if it does pull back, I see plenty of strength because there's a lot of volume on the past week. That daily is probably going to try to take a little breather, but plenty of support back here. Because that's a hammer setting up, of course, but that doesn't mean it's going to pull back. But if it does, the 4 hour was, everything's a little overextended, but the consolidation right here, it could churn back into here and it might push off again. There might be news to push it. So that January call looks, you're in the January what, like 145 or something?
I'm a January 180.
Oh, you going Honda. Okay, you said. Yeah. Let's see here. NVIDIA, okay. January 180. Let me see the open interest on that. Yeah, man. That's a tough delta, but hey, $1.58. There's no
Got
big.
plenty of time.
Yeah. Absolutely plenty of time. These Januaries. Oh, Walmart. Well, I was ambitious. I mean, I'll put it like that. I can't, even if I go out far like that at 12 Delta. I mean, I'm not saying it's not going to happen because, I mean, I trust you and your instincts on pretty much all your plays. For me, I have not had success under 20 on my deltas even though they churn and you know, Walmart's a different breed. Um, I, the lowest I'd go right now would be that that 150 for me, but I think that your chart is in good shape for, you know, for a push. I'm looking for a pullback and possibly another entry to keep moving. But Walmart had the news, like you said, the streaming services. So there, I mean, there's some things that are lined up, but I just don't trust news until the price action hits. But I trust you. I trust you with your assessments. Uh, yeah. I'm bullish on Walmart, so it, that's
Oh
just
yeah.
the thing with us in options is our timing and you know the timing and the move and the market makers. So, but bottom line is I'm bullish. You're bullish long term, and so Nvidia for Kylan. It's still trying to push 4 hour
Nvidia
looks.
was pretty on Friday.
Jesus.
That was beast mode.
I'm
I
still
don't,
in it. I hope it popped tomorrow so I
I
can
don't
hop
even know
out.
what to do with it, man. I just saw those candles. I was just like,
3 year week. Oh
Hopped
my
into it Friday.
goodness,
I was
man.
like,
Oh
it
my
was busting
goodness.
all day.
Imagine getting in the week of March 23rd, you know, when it's back down at the open of 205. It hadn't stopped since then. Even now, this is one where you say, I'm waiting on a pullback, and the pullback never comes. It's It'll take a pause. It takes, well, actually, there have been a couple of, boy, pullbacks are coming. It's been overbought uh, August 14th. So half the month overbought. And when it does pull back, it's been trading range bound. You said you're in it right now, Colin, or you looking?
I'm just looking. It just caught my attention. And like a lot of traders I thought talk about it and trade it constantly. So I'm just kind of yeah, I just looked at it.
Hmm.
I
I
have
mean,
some
it's
millions
not
on it.
out of control, but to chase it,
Mm-mm.
the probability's down. But I mean, now the only way to chase it is start going off into like the hourly and playing it off the hourly tops. Like it stayed in that trading range. That flat top breakout happened. And the crazy thing about it, when it does pop up on the first hour, it stays up, except on the day of 7th of August, it came out the gate and reached a high. You know, open was 452, the low was 451, the high was, you know, it popped $8, and it sold off. But other than that, man, hmm, you know what? Up there, there might be an entry coming. If it does, if it pulls back, because I'm looking at the RSI and what is done on the hourly when it gets overextended, it will come down to a point, and there's a lot of support right here, man. 511, 512. Let me write that down. 511, 512. NVDA. Now, by saying that, there's a chance those runners with momentum could keep going, and there's no other entry on a pullback. Sometimes it blasts off and doesn't come back till it stops. But I can't chase it. Uh, so I'm setting an alert at like five. I'm gonna say 513 is gonna be my alert. If it falls below that, 513.24. That was just kind of random area right there. Um, just kind of get my eyes prepared for that. And Nvidia, got 19 days. I would still be looking at the September calls because I know it's pricey. Ooh, 2Gs, that's cool. 26. That is 60 cents already. Hmm. It's gonna be a $2,000 rip, you know, for it to happen. But if it pulls back, well, now if it pulls back to 511, these prices will adjust, you know. And so I'm still got. I want. I prefer 60 delta, but something like Nvidia, that 40, 45, 50 delta are going to be the ones that are reasonably priced. In 19 days is enough time for something, but once again, it might trend out to the one where we have to look at the October 16th for protection. And then if there's nothing good, you start picking apart the weeklies, you know, kind of how I can't remember which one we did that on, but the weeklies, you know, will come into play. HPQ. Let's take a peek at HPQ for Crystal. And then I'm going to look at American Airlines for wifey. Oh, that weekly looks excellent. That's a pure, that is a, on, you know, if we're going a long swing, that's a perfect entry. You know, you had a push up, had a pullback, basically a reversal or a pullback, then you had a new high. So you enter on when it makes a new high, you set your stops, whether it's at the bottom of the pullback or it would be a tight stop. Now we're looking for continuation or follow through. So what is the daily? It's probably close to extended. All right, this is a good one. There was a wedge break. That's the wedge I would draw. I could lower it down here, but this is like an anomaly pullback right here. I'm touching more of my trend line with that. And if I want to use that as the wedge for Rona, but I don't like that right now. Go here, or I can even tighten it up. And all right. Had the breakout, testing a little area, great volume. What did it do the last 4 hours of the day? Overbought just a little bit. We might get a retest of, you know, but right at 19 or 1920 in that area, or even come back in here, just a tick below 19. 1938, come back to the breakout area, 1925. Let's see what it does. I'm gonna set an alert at 1925. See if it holds at the 1925 area into the afternoon. So really, there's a lot of activity right around this area, 1925. The breakout level of 1855, give or take. That little demand zone is down here, 1863. support. $18.31. You know, Crystal, this is a good one. I'm just and you've been calling them. You've been calling them. I think what was it? What was the one? Deer. Your move on deer. Um, what I always use, I always check my my RSI. We can go above that, which is fine. So if you find an entry where you get comfortable to go long, um, my suggestion would be to HPQ. And let's look at the news first. Make sure there's no earnings coming up. Maintains a buy on HPQ. COVID list, Cohen lists, they lifts HP's price. It's a bullish play. Um, 49,000 to 9,000 on the calls to puts. Oh yeah. Oh boy. That delta, you can get you an in the money for $119 right now through September, or you go out to October in case that pullback hits a little bit longer, and you getting in the money with 4,000 open interest, 47.75 open interest for $158 at the $19 calls. HPQ calls look really good. Great call, Crystal. Um, if you're gonna do anything to be safe, go out to October if you're gonna go long. Just to give you.
That's what I was thinking,
Yeah.
October or January.
Okay, great call on that. That looks really good. Um, I'm the thing about it. I wouldn't quadruple witching coming up when Crystal. I mean Keisha. September 18th. Okay. Okay, got you. Thank you. Where we have multiple expirations occurring, but go out to October and because
Catch that entry on 9/18
when it pulls back,
when it pulled back.
Thank
yeah,
you.
that I like it. I like the bullish on the daily, and like with deer. Let's go to deer real quick. How deer it was overextended and it's still overextended. Where I couldn't just say, hey, get in, right now. Now it's pulled back, but when I look at overextended for me, when I'm that far away from like my moving averages, like when there's a gap, there's a heavy gap, price tends to come back and find to kind of equalize or rebalance. Because okay, you see this breakout right here. This is a perfect trend for where we saw it on this. You see it here. The is that was a trading range test again, broke out, stayed above and pushed. Trading range, gapped up and ran. I see deer coming back into reality because it was going up on declining volume, which is a bearish sign for me, but you don't know when it's going to pull back. So I couldn't get in. It's just, you know, off of my trading plan. So we have a breakout on this on deer. We look at Visa. You see the same similar pattern. Trading range where it doesn't break above a certain level, then all of a sudden it breaks down and runs like a mofo. That's beautiful. And we've been talking about Visa since 203. It's at 215. Deer's done the same thing. Visa, it's not rolling over like Deer to pull back, and Visa generally follows MasterCard and look
Which
at
being a
MasterCard.
beast.
Huh?
I said MasterCard is being a beast.
Yeah, man. It did the same. And the pattern that I'm trying to just show you guys is the flat top breakout. That if you spot that prior to the move, you can load the boat and protect yourself. You know, it has to be a trading range. We have to track it for a little while. It has to test it and fail, test it and fail. And wifey's in here. She knows my line. Just put the tip in and then pull it. And no, you can't live. That's just something in a man's DNA anyway. Um, it's just the fact that it's going to test the level and fail. Test it, and you win her trust. She doesn't see the other side of you. You really, and then okay, we're a family now. Boom, and run. But I think with HPQ, I don't know. I don't. Let me see what. And HPQ has done that. It's testing, and I guess I've drawn some levels on HPQ before, but boom, test there, tested and failed and broke out, and it could run or it could come back and test a little bit, but let's see what the ATR is on HPQ. And I just like to pull it up on this screen because I know it. I can get it on FinViz or whatever. And it's mandatory, not mandatory. Shoot, if you're gonna spend money on an option, know what the average trading range is so we can know how far to go out and if it's gonna move. HPQ, you want to load for me? Still loading. And dividend comes. Hey, Crystal, are you getting the shares?
I was thinking about a call.
Okay, okay. You're gonna call and not going with the stock shares. Okay.
It's on my legacy list though. So I
Well,
buy it like the drip through Stockpile app, just little by little every paycheck.
okay, cool. So you getting that dividend? Are you reinvesting that dividend?
Yes.
Perfect, perfect. Well, that falls into a hybrid. Let's put it up on. Let me pull it up on this one real quick, guys. Give you a new share right there, and so if you look for that call, your ATR is 54 cents. So you know how Keisha went out of the money with Walmart. Walmart has it moves enough to, by January. Let's see, Walmart is 279. It's not a big mover. So if she was going that far out of the money for September, you'd need Sam Walton to come back to life and endorse Michelle Obama, and then say that they were going to buy TikTok, and then Walmart can move $15 and over some catalyst could push a low ATR stock to crazy heights, but you have enough time with 279, and also with on Walmart with Keisha going out to January. Same with HPQ.
That's how I gauge it. Like, how much does it move? How much of a pullback am I looking at? And then be reasonable.
Right.
But because anytime I failed in a trade, when I first started trading options, I was being cheap and I didn't give myself enough time. And then I was being cheap. I gave myself enough time, but I was too far out. So now I gauge off. Okay, I give myself enough time. I'm not too cheap and I'm reasonable.
Right. Well, I mean, shoot, and you have a game plan in place, and it works for you. It definitely works for you too, especially you know, live in the market. Some people can plan it out and they haven't even tested it. So I definitely trust your instincts on that. With wifey looking at American, it last 24th we were talking about it, and then I was saying that it looked like it was time on the 5th. Around that time it pushed up, and all of a sudden it's back in a churn. uh, Jets, I track Jets, that ETF. Ah, okay. I was actually looking at possibly hopping in Jets last week. We get a push above, because the thing about the airlines right now, they're on the headline list for the government needs to step in. Uh, it's set up on the daily for me
Are
for a long.
we still looking at Finviz.
Thank you, thank you. I'll repeat this whole thing. Okay, as I said, I'm looking. Let me go back to American. And go back to American and say exactly what I just said. Thank you very much, sister. Uh, on the 5th of August, I said it was time to, I was talking to her. I was like, it might be time to hop in American and accumulate, because if it has found somewhat of a base, and a rounded base, you want a long rounded base. This could be share accumulation during this period. It might not go above this level. It could churn right in here for a while. It'll have to make it past, the $16, $17 handle, finally start making a run back up, but it's going to need help from a stimulus. Uh, so American on the daily is not ready to buy an option, but if you're looking at share building and accumulation, it looks solid. Now to go to Jets, for me, Jets is set up for a push. What's the high right there? 1828. And the high on that, 1831. So, a break above 1831 by the afternoon, greater than 1831. I'm writing that down. That's an entry. Let me put it on market watch. Let's see what the ATR, because I'm thinking that ATR is not big, but the thing about it, it can jump. And my ATR is still loading on this thing. That's all right. Let's see. We'll go to Fin. I'm not gonna switch the screen. I'm just gonna check FinViz. I'm gonna leave y'all right here. I hadn't left y'all. ATR for Jets is 54 cents. It's not, now if I'm doing that to make a play, just use Jets. I really use Jets as my gauge. If I were to make a play on Jets to make a trade, I'm buying more than one contract. Because it's going to move 54 cents only. I'm looking for a break above that 1831, and the prices are reasonable. 120 bucks for that $18 call. Don't go too far out of the money if you guys try it. I mean, I wouldn't touch the 42. I wouldn't go just because it's 75 cents. That's cool, but if you're gonna get in something, either go with the $18 call or the $17 call at a 72 Delta 2200 uh, open interest. It's under 200 bucks, and set your stops pretty tight. Maybe give it 50. Give it 50 cents. Now, if you buy two options, go ahead and buy. If you buy two, you give 25 cents or 50 cents, and that'll be $100 risk reward. Let's see. I'm gonna go one more, and I was checking Disney, IWM, and Datadog, but IWM it mimics the Russell, and it's set up. It is really set up, guys. Almost looks like how Jets was poking above that. We got a wedge. It's ready for a wedge break. And this is a small cap ETF. And right there. And IWM's mom works nights. And we're just getting to know her. Getting to know her. She's been really positive, good student at school, and has barely put the tip right there. And the weekly, that wedge is setting up also. Go to the 4-hour. Thing about it, nothing is overbought. Even with the breakout after hours, that pullback, there's nothing over 70 right now. Let's see what the hourly looks like. Even the breakout on the hourly did not push that push it above 70. Down to the 30-minute. 30-minute is going to pull back some. If we get down to the 5, I'm sure it's overbought. Yeah, and it's pulling back. So IWM is my pick right now. And let's see what the Russell 2000. We can go with the September 18th. That gives you more than 2 weeks. And we're trading at 157.12. Even it's calling it in the money. So it's at it's already up right now, guys, and pre-market 158. So we're going to have a breakout and a pullback. And the one I like all of these right here from, oh my goodness. Yeah, I would spend a little extra. The 155 is 70. Okay, you guys ever heard of unusual open interest? There's a guy on CNBC that trades that every day. I think Bar Charts has it, maybe investing.com. But 73,522 open calls right now on that IWM. And let's look for the put call ratio and see how bullish we are. It's 50-50. But let's see what's deep in the money. Delta between 61 and 80 is 7,700 to 2,800. And the deltas between 41 and 60. So the in the money deltas, big time over bullish calls on these guys. Now the out of the money, the possible spreads, or someone could be selling those, that kind of thing. So I'm bullish, man. Let's take a peek at it. Let's look at it again. All right, for the September Johns, the 155, September 18th, 155 call, deep in the money, all the way through down to even out of the money, the 159s, and 90,000 at the 160. That is the bear, and it's going to move.
That's where I'd be.
Yeah, I know. That's you like going out of the money. You like pushing it, but that's 90,000.
Drug up the option chain.
Okay, guys. Keisha has a trading strategy. She has her trading plan, her style. She uses a momentum play to where you go out of the money, it'll tick you up. But you have to have your play in place, guys, and know what to expect, know how it moves. I don't do this as much, but if you're trying to get in on a move and it's setting up, it works. It definitely, because she uses it with Tesla, she uses it with a lot of options. I'm gonna use that money right there I'm gonna go a little bit more conservative. I might spend a little extra and go off in the money to where I can hang out with some other folks at the country club just for a little bit. She's gonna come she's gonna bust through the front door of the country. She'll bust through the back door and have all access pass too. So it's
I just want to peek in. I ain't even got to stay long. I just want to nibble and keep moving. And
and
then
get the
once they
benefit
hit me,
package.
yeah, once I get to 160, once I get in the money, then I'm out. I'm good. I just wanted to see if I can get there. All right, thank you. See you later.
And Crystal says she's not even invited to the country. Well,
You
we don't
always
need the
invited
country
to the
club.
country.
I'm faking it. I'm coming in there for a little bit. You know, they'll see my freckles and let me hang out for. And I'm like, look, I'm out.
See that 160? That 160 is only what,
It's not
206,
that
and
far
I'm
away at
cheap.
all.
I'm cheap. I see the bid and the ask. I'm gonna go and put it like 204 and see what happens.
Keisha, you won't just pay that 206?
No,
Oh.
no. I'm gonna do like 204 and then come pick me up.
Okay. Okay. See, hey y'all, look. And my wife is like that. My wife is she's gonna bid you down. I'm gonna just go ahead and pay you a little
See
bit.
that spread?
I'll drive through and come get you, Keisha.
Thank you.
You should get that. Okay. Well, look, y'all. IWM is our pick to click. That's a pick. Uh, what did I think Colin put something on there for IVM? Let me look at IVM, man. I have never looked at IVM, but
Well, not my bad. I meant the IWM. I was a
I was
typo.
about to say you got another one, Colin. Okay.
No, that was a
Disney
typo.
been nice. I think you said something about Disney. Disney was nice last week.
I missed Disney. I got
I
distracted at
keep
work.
saying I was gonna get in it, and then something else happened.
Look at this,
Somebody else
man.
will say something about Disney.
Look at Disney's weekly. Oh shoot, that's the perfect bull flag. Pushed above resistance. Came back and tested
Yeah, I
it.
missed that move.
That's a perfect entry right here, guys, for the week. Now let's see what the daily. Okay, yeah, it's gonna let Disney come back to 132.
Right?
Let's push. Set the alert for 132 on Disney. I'm gonna go 132.25, head or below, and that just not to say to hop in. Uh, it puts it back on the radar for us to be prepared for a trade. Now, with that being said, Disney could run. It could do a deer. It could do what Microsoft and what are the other ones? Microsoft did it last week. Walmart ran. Everybody ran. You know, but there's something here with Mickey, man. Mickey gonna have to face. He's gonna have to face the judge at some point. It might happen like Mo's saying with the pullbacks with September, October. It's gonna come back down, and it will face the judge just like it pulled back in June. It'll reset and find us an entry because COVID has not been. We hadn't figured it out yet with COVID. So let's just Disney's on the hold. IWM makes the call. Um, we'll go one last one, and then I'm gonna do what we. I'm gonna let y'all hear something. Data dog. Just didn't do it. Data dog's churning, guys. It's kind of hanging in that Visa type of trading range. It went up and closed the gap. It filled the gap, but right now we're hanging out in a holding pattern. All right, bam. Let this sucker try to go up above 86.25, but we need to go above officially. Don't go in. If it goes above that 86.25, don't go in long till it proves it can hold above the high of 87.26, okay? And when it does do that, it's probably going to tip in and sell out. If it doesn't just tip in, it's been cheating. And it's supposed to really, You just don't let people in the house like that. It's a test, and then it needs to come in. But it's setting up. So the entry to really spot is above 87.26. I'm gonna put the alert for that. Where's my alert? Bam. 86. Okay. At or above 86.25. Not saying to go in on Datadog at above 86.25, but that alert means it's going to go up and test, and you need to have basically a confirmation. So you have a entry. You can enter on a reverse. I'm just kind of showing an example, like a reversal. You make a new high. You could enter on the new high, set your stops, but then you get your confirmation, a continuation or a follow through with the next full candle or above the next, above that next high. So that gives you some good strength. So Datadog is a watch, just watch, but an IWM makes the call. Guys, what I want to show right now real quick, you can let it play on the audio. We'll go for another 20 minutes, but it's this Arthur Levitt was part of the Clinton administration, and here's the book that I'm listening to right now, Take on the Street, and he breaks down Walmart. I said Walmart, Wall Street, from an insider's perspective. He was an investment broker, banker, all that stuff, man. So it was very interesting. He had an interesting take on everything, and I got the book recommendation from listening to Rich Dad. There's a new one about how to be rich or whatever by Robert Kiyosaki. So I was like, okay, it's a pretty good recommendation. Let's dive off into it. And it caught my attention. So I'm gonna let y'all have this we'll go for about another 20 minutes, and then we'll shut it down. All right, guys.
This is Audible.
Books on Tape presents Take on the Street, What Wall Street and Corporate America Don't Want You to Know, What You Can Do to Fight Back, by Arthur Levitt, read by Scott Brick. Introduction. When I first became a broker in 1963, and for many years after, my mother, Dorothy Levitt, was my most difficult client. For 38 years, she taught second grade at PS 156 in Brooklyn, New York. Like so many of her generation who grew up during the Great Depression, her mistrust of the stock market was visceral. So she invested in municipal bonds because of their safety, but also because they charged no commissions, she would often say. I could never get her to understand that a bond purchased from the inventory of a brokerage firm included a markup that was usually far greater than an ordinary commission. In the hands of any other broker, my mother might have been easy prey. She was not unlike many investors who, even today, don't understand how brokers are paid or why they recommend certain stocks and bonds over others. I grew up in the Crown Heights section of Brooklyn, where I lived in a modest brownstone with my parents and Orthodox Jewish immigrant grandparents. Nearly all our meals took place at an oilcloth-covered metal kitchen table. The dinner talk focused on low finance, the comparative cost of milk or lettuce at Kushner's Troy Avenue grocery store, as opposed to Waldbaum's on Albany Avenue. But often we veered into politics. The views of my grandfather, Pops, were mostly diatribes leveled in equal measure at the rotten socialists and crooked politicians. Pops amused me, but it was my father's less strident observations that made a bigger impression. The politics of my father, Arthur Levitt Sr., were nominally Democratic, with a fiscal conservative streak. 6 times he was elected New York State Comptroller as a Democrat, but otherwise he had little to do with party politics. For 24 years, he was the sole custodian of the multi-billion-dollar pension fund of thousands of New York public employees, including teachers like my mother. The rights of the small pensioner and efforts by politicians in both parties to raid the state pension funds dominated our discussions. My father fiercely defended his independence, whether he worked with a Democratic or Republican governor, and placed the well-being of New York retirees above all other considerations. I shall never forget the day when he encountered New York City Mayor Ed Koch in the halls of the state Capitol building in Albany. It was 1978, and the city, having barely avoided bankruptcy 3 years earlier, was facing another fiscal crisis. To Mayor Koch, tapping the state retirement funds appeared to be the only way out. But the comptroller had refused to give his approval. As Mayor Koch approached, he pointed at my father and said menacingly, "If New York City fails, it will be your fault." This confrontation upset my father so much that moments later he suffered a minor stroke, which left him unable to speak for several hours. Only his closest staff was aware of this episode, from which he thankfully recovered. Unable to overcome my father's tenacious protection of the pension funds, the city secured the financing it needed when the federal government agreed to guarantee the city's bonds. I learned that when it comes to protecting investors, no political party has an edge over the conscience of an honest public servant. My first exposure to high finance and politics came in the late 1950s and early 60s, when I sold cattle and ranches to wealthy people who needed tax shelters. When the Internal Revenue Service tried to do away with the tax shelter benefits in 1960, I joined forces with the National Cattlemen's Association to try to protect the subsidy. At a House Ways and Means Committee hearing, I recall arguing before Representative Wilbur Mills, the powerful committee chairman, that reducing this tax benefit would result in farmers producing fewer breeding cattle, which in turn would raise beef prices and irreparably harm America's consumers. In retrospect, it was a specious argument. But I learned that one of the Washington lobbyists' most common tools is to cloak business benefits in the garb of some supposed public good, and was always alert for it thereafter. My life changed dramatically when one of the prospects I called upon, M. Peter Schweitzer, then a top official of Kimberly-Clark, said to me, "Arthur, if you can sell cows, chances are you'd be good at selling stock." He told me his son-in-law, Arthur Carter, was starting up a brokerage firm with a group of friends and that they were looking for suitable partners. I met with Carter and signed on with his tiny firm. My partners were Carter, today the owner of the New York Observer newspaper, Roger Burland, now a successful Broadway producer, and Sandy Weil, the current chairman of Citigroup. We were young, ambitious Jewish boys of middle-class origins fighting for recognition in a white shoe industry. Initially, I worked with retail clients, sought underwriting business, and learned the ins and outs of building a Wall Street firm. It was during these years that I dealt with thousands of retail investors, first as a broker and then as president of Shearson Hayden Stone, which our firm came to be called after a series of acquisitions. By the time I left in 1978, the firm was one of the nation's largest brokerages and would ultimately become part of Citigroup. Most of the brokers I encountered were good, honest, and intelligent business people, but their primary motivation came from a compensation system that rewarded them for the number of transactions they executed, not on how well client portfolios performed. Even when the best course of action was to do nothing in a client's account, the commission system encouraged brokers to recommend sometimes questionable trades. We knew, for example, that we would get 5 times the normal commission by placing secondary offerings, shares issued by companies that had already gone public but needed more capital, with our customers. 100 shares of AT&T, for example, at $40 a share, paid a 1% commission for a total of $40. But the commission on 100 shares in a secondary offering of the same AT&T stock was 5%, or $200. We could have purchased the same shares a month or even a week earlier had we thought it a good investment. Why did we suddenly find AT&T attractive one day when we weren't recommending the stock the day before? Our motivation was self-interest, pure and simple. As our firm struggled to develop new lines of business, It was my job to call on state agencies and communities around the country to secure the lucrative franchise of managing the issuance of or underwriting their municipal bonds. Many times I was told that the quid pro quo of getting on the list of potential underwriters was to buy a table of tickets at the mayor's or governor's campaign fundraiser. This experience provided the origins of my determination in 1994 to eliminate pay-to-play from the municipal bond business. When I solicited investment banking business from companies considering a public offering, I spoke of our retail distribution, as well as the fact that our analysts' coverage would be vital to getting their story out. Retail distribution meant that our sales managers would pressure our salespeople to sell these underwritings. Often the local manager's bonus depended upon his ability to market our merchandise, and future allocations of hot issues were based on the salesperson's ability to place all new issues we brought to market. Analysts' coverage, of course, was always favorable. I can recall no sell recommendations. There must have been some during my years with the firm. I also came to understand the motivations of CEOs who cared only about the price of their stock, often to the exclusion of any long-term vision for their company. To persuade our brokers to place more of their securities in customer accounts, corporate heads conveyed important company information to our sales and research departments that was not yet available to the investing public. At the same time, I heard from many retail clients that the big guys get information before the general public, and that the small investor will always play second fiddle to large institutions and people in the know. What I witnessed was just the tip of the iceberg. The web of dysfunctional relationships among analysts, brokers, and corporations would grow increasingly worse over the coming decades, and ending it would be one of my primary goals at the Securities and Exchange Commission, SEC. While I am proud of helping to build one of America's largest and most distinguished brokerage and investment banking firms, and remain friendly with most of my partners and coworkers, I grew uncomfortable with practices and attitudes that were misleading and sometimes deceptive. I first spoke out against them in a 1972 speech called Profits and Professionalism. Over my partners' protests, I called on the industry to think quality over quantity, to pay brokers on the returns their clients received, not on the number of transactions in their accounts. It caused a minor stir, but was soon forgotten. Over the next 20 years, these issues would continue to nag at me. I had an agenda, but not a forum. The ideal forum would be the SEC chairmanship, which, if offered, I would have accepted without hesitation. By the time Bill Clinton tapped me for the post in 1992, almost 6 months after he became president, I had spent 16 years as an executive of a brokerage firm, 12 years at the American Stock Exchange, and 4 years as the publisher of a newspaper about Congress. I'd like to think my Wall Street and Washington experience recommended me. But I suppose the $750,000 I raised as one of 22 co-chairmen of a New York dinner for Clinton just before the 1992 nominating convention was not lost on the new president's inner circle. I first heard that I was under consideration, not from anyone in the White House, but from a Wall Street Journal story. No Clinton insider had ever interviewed me about my policy ideas or asked me if I was interested in the job. From the day President Clinton nominated me, I knew I wanted an individual investor to be my passion, and I wanted to pursue change in a nonpartisan way. I had spent 25 years on Wall Street, and I understood the culture. Actually, there were two conflicting cultures. One rewarded professionalism, honesty, and entrepreneurship. This culture recognized that without individual investors, the markets could not work. The other culture was driven by conflicts of interest, self-dealing, and hype. It put Wall Street's short-term interests over investor interests. This culture, regrettably, often overshadowed the other. When I arrived at the SEC in July 1993, we were in the third year of a bull market, which would run for another 7 years. Individual investors were buying stocks as never before. On the surface, everything seemed fine. But there was much about Wall Street and corporate America that made me uneasy. For instance, many CEOs were paying more attention to managing their share price than to managing their business. Companies technically were following accounting rules, while in reality revealing as little as possible about their actual performance. The supposedly independent accounting firms were working hand in glove with corporate clients to try to water down accounting standards. When that wasn't enough, they were willing accomplices, helping companies disguise the true story behind the numbers. With 1/3 of accounting firm revenues coming from management consulting in 1993, that proportion would balloon to 51% within 6 years. It was hard not to conclude that auditors had become partners with corporate management rather than the independent watchdogs they were meant to be. CEOs and their finance chiefs had learned they could indirectly control their stock price by currying favor with research analysts. Some were trading important information about earnings and product development with selected analysts, who in return were writing glowing reports. Such selective disclosures got passed on to powerful institutional investors, mutual funds and pension funds, and to brokers who could be counted on to place a substantial number of shares in the accounts of individual clients. Analysts were often paid more to help their firms win investment banking deals than for the quality of their research. This unholy alliance was producing revenue for the analyst's firm, but hardly any benefits for most of their clients. Mutual funds and pension funds were getting far better information, and a lot earlier than retail investors. Because of their muscle, they were also getting superior service and better prices when they bought or sold securities. Mutual funds were very successful at passing themselves off as investor-friendly, but they had their own, more subtle ways of taking investors' money through a confusing array of fees. Fund companies were spending billions advertising past results rather than informing investors of more important factors, such as the effect that fees, taxes, and portfolio turnover had on returns. From my 12 years as chairman of the American Stock Exchange, I knew that investors were almost totally in the dark about how the stock markets worked. Collusive practices among NASDAQ dealers were costing investors billions of dollars a year. At the New York Stock Exchange, NYSE, floor brokers, specialists, and listed companies set the agenda, one that protected their franchise, sometimes at the expense of investor interests. The New York Stock Exchange was also resisting a truly competitive national market system that linked all the markets, as Congress had directed years earlier. Individual investors were unaware of this side of Wall Street, and yet they were the victims of these long-standing conflicts. I wasn't alone in my observations either. Frank Zarb, with whom I worked at Shearson Hayden Stone and who would later become head of the National Association of Securities Dealers, NASD, and the NASDAQ stock market, first attack pay-to-play in the municipal bond market. I discussed with Merrill Lynch Chairman Dan Tully the problems I saw with broker compensation long before I got to the SEC. Shortly after my confirmation, several CEOs pleaded with me to end the unseemly practice of leaking corporate information to analysts. And analysts sent me confidential letters exposing how selective disclosure had become routine on Wall Street. They wanted me to stop it, even though they were the beneficiaries. I would spend nearly 8 years at the SEC trying to correct these imbalances. I would soon learn that many people harbored within the agency. The senior staff viewed the worker who got the job by raising lots of money for Clinton.
Okay, everybody, that's going to be a pause, and we'll stop for the. Let's see, unmute everybody. Yeah, we're going to shut it down for the Sunday show. We'll be back next week, but I added to our watch list for today. Added Louisiana Pacific, LPX, and Potlatch PCH. the lumber's pulled back. They were setting up. I don't know if you guys were looking at the screen, and Colin caught a good move last week on potlatch. So I'm looking at PCH and LPX for swing plays. I'm actually getting a feel for how they trade, how they move. But lumber was overextended. It's still a little overbought, but it's pulled back, found some support. So we'll just kind of keep an eye on that sector. I'm bullish on it, but all things kind of come to an end. Let me look at one more thing before we go. I want to check out GOLD, and I think I'm sharing the screen with y'all the right way. Maybe I'm not. Yeah, I am. Let's see. And I've been in this in the Roth IRA for a minute. And gold, it was in need of a pullback, but this thing is churning, trying to set up. So we'll just see how this goes, but it's staying above these levels, 25.66 and above. Got a little gap to hang out with, but this is a commodity and they don't operate exactly like the stocks, pure stock plays. But yeah, guys, thank y'all for coming this week. I'll make this recording and I'll make it available. And next week, if you guys want to invite a friend or family member to the Mastermind group, you're welcome to bring them. Give them a free pass where you can come in and talk stocks or whatever. All right, guys.
Okay. All right. Thanks, JD.
Okay, I'll see. Hey, I'll talk
Thank
to y'all
you.
tomorrow. Hey, I'm gonna probably open up the room in the morning, so just come on in.
All right. That sounds good.
Okay, I'll talk to you later.